Dear learner, welcome again. We are discussing the part 11, that is the controlling techniques, and in the part 11 so far we have covered up from module 51 to 54. In today's session we will be highlighting our understanding on the module 55, and in this particular module we will be getting the insights about 3 more management or the controlling techniques which are very much influential in the contemporary business situations. The very first one is your stakeholders, total shareholders return concept. Second is your network analysis, and within the network analysis we have the PERT and CPM. Alright. Third one is management information system, that we call it as a MIS. So, in the earlier methods that we have discussed, the modern methods, we talked about the balance scorecard, integrated ratio analysis, your economic factors, that is your economic value added, market value added, alright. And today's session we will be concluding the part 11 by our understanding on these 3 very important methods. Now, the concept about the total shareholders return, okay, we will be trying to understand the conceptual thing about the shareholders return, alright. So, the point is the total shareholder return is a over a period change in the stock price. Okay, so imagine yourself as a shareholders and try to get the concept. Okay, you are a shareholder. Okay, you have invested your money. And you purchase the share of any XYZ limited company. Okay. You have purchased suppose 100 shares at the rate 20 rupees. So, total amount that you have invested is rupees 2000, okay, 2000 euro total investment. Now, what are the things that you will be getting from the company as a shareholders? It could be the company is like based on the operation part, they will be having the strategic thing, operational thing, okay, and ultimately they will be contributing towards the growth of the company. Okay. Now, the company's growth signify the increase in the market value as well. Okay. So, increase in the market value means the share price of the company will also goes up. Is it right? So, suppose you have purchased the share at rupees 20. Now, over a period of time you will see the appreciation in the price of the shares. Now, the share price is suppose rupees 30, alright. So, your total investment will be increasing by 30. How many shares you have purchased? It is now 3000. So, now 2000 has increased to 3000. This is your part A from the company. What will be the part B? The company has announced a dividend as well, that we call as the cost of the capital. Remember, the company has taken the money from the public or the shareholders. The company has to give it back in terms of like compensation that you are giving towards the shareholders for like infusing the capital towards them or towards the company XYZ. Suppose the company announced a dividend, the company has in the growth and the company is getting the profit, company has announced a dividend of rupees 2 rupees per shares, alright. So, out of 20 rupees the company has announced a dividend of 10%. So, how much you will be earning? You have purchased the share of rupees 100, alright, suppose writing it here 100 shares, and the dividend per shares you will be getting is rupees 2. So, it will be rupees 200. This is your part B. So, overall what is shareholders returns? Total shareholders return, it will be the summation of A plus B. What is A? A is your 3000 plus what is B? B is your dividend 200. Total shareholders fund TSR is equal to 3200. Initially as an investor, how much you have invested? Rupees 2000, but what this amount has goes up to rupees 3200, and from where this amount has been segregated? From part A, that is the appreciation in the value of the shares, or the price of the share has increased based on the growth of the company, alright. Earlier you have purchased at rupees 20, now the price of the share has goes to rupees 10 and goes from rupees 10 and it is up to 30 rupees per share. Again the company is getting the profit, and because of which the company is announcing the dividend of rupees 2. So, overall the total shareholder fund is rupees 32. With this concept, try to understand the theoretical part of the TSR. TSR is over a period change in the stock price. We have got the understanding how much the price of the share has changed from 20 to it was 30. In this example, you see the price was 20 at the very first stage, now it is 30, alright. Again, reflecting the revision and the expectation from beginning to the end of the period plus any cash paid to the equity holders. What was the cash paid or the dividend paid? It was rupees 2 per unit. That is why we call it as our total shareholders return. More important thing, TSR is the capital accumulation rate that the investors earn if they reinvest of their dividend into more shares of the stock during the holding period. So, as suppose the total shares you have purchased in this example, let me change the color, blue. The total shares you have invested or purchased is rupees 100. Okay. So, the quantity of the shares will not be increased, the price will be increased. The price was 20, now the price is 30, got the point. But still your number of shares is rupees, unit of the shares is only 100. So, there will be no appreciation in the increase or the unit of the shares, but the price will be increased. However, it will be under your demat account. We know that we need to have a demat account to like do the trading activities. So, under your demat account only 100 shares will be credited, but when the company are announcing the part B, any kind of profit, that is rupees 2, it will be directly credited to your bank account, okay, your saving bank account. So, how much credit was there? Rupees 200. So, overall 3200 is the value of the total shares or the holding of the shares. So, what the company expect that 3 out of the 3200, 200 rupees is the appreciation in the overall saving bank account, and those 200 will be reinvested in the company. It could be in the company X or any other company. This is the philosophy or this is the concept of the total shareholders return. Okay. Coming back to the theory, TSR is the price appreciation plus 1 plus price appreciation into the dividend yield. Okay. Dividend yield we have got it right, rupees 200. Price appreciation is equal to rupees your how much price has increased? It was increased by 2000 plus 1000, that is 3200. Got the point? Now, what are the different functions of the TSR? With this understanding about the concept, try to understand the different multiple functions that is engaged under the TSR. Very first one is TSR flows, cash flows that result from the sales growth. Okay. How the company or why the company will be giving the profit or the dividend to the shareholders? Until unless the price of the or the share sales are increasing, the company will no longer be interested in announcing the dividend. Okay. Like understanding the characteristics of the shareholders or equity shareholders get the dividend after the interest is being paid to the debenture holders. So, you are not the priority of the company, priority is someone else. The priority could be the externals, you are the internal of the company. Okay. The preference shareholders, the debenture holders, they will be paid even the company are at the losses. But if the company will be at the profit, you will be getting some kind of appreciation in the value through dividend, announcement of the dividend. Second one is operating profit margin. Through the operation part, through like the production process will be converting the raw material towards any kind of product. Okay. The product will be semi-finished product or the finished product will be sent towards the packaging, they will be sold out to the consumers. So, this is the operation part. Okay. Operating profit margin we have discussed, it is like before any kind of taxes. Okay. We call it as NP, non-operating profit after tax, that is the net profit, and before that we have the operating profit margin. Third one is the investment. With respect to like the appreciation that you have got in terms of increased value. Okay. The shareholders will be reinvesting the dividend that is being received by the shareholders, they will be reinvesting. Okay. That is, we call it the reinvestment. And other factor like economic factor, inflation, cost of capital, they will be also like contributing towards the total shareholders returns. Okay. For example, any undue or unfavorable situation occurred, like we have discussed about the demonetization, all right, COVID-19, any unprecedented situation happened, and ultimately what will be the impact? The overall sales will be declining and the total shareholders fund will be like shrinked. If the total shareholders fund are totally dependent on the performance of the company, the growth of the company, you take the view of the shareholders approach, balanced scorecard we have discussed. Okay. So, what the company or the different managers are trying to emphasize, that the shareholders fund should be the priority, and it is very important that the controlling measure should be objective towards reducing these factors, be it the internal factor or the external factors. Some of the external factor you will not be able to like control, but it is very important that the internal factor like the performance of the employee, motivation, the organizational structure, these factors should be very much clear, and it should be very much uniform. The efficiency of the employees should be increased, so that the overall shareholders return can be increased. TSR concept we have discussed. The next is the network analysis. Now, the network analysis is very much important with respect to the companies who are performing the very like complex type of the project. So, network analysis means network diagram prepared to show the interdependencies between the project operations. Why network analysis is important? It helps in effective planning and control of the complex project work. If suppose you are like dealing into an international businesses, a new market where you do not have any kind of prior experiences, alright. So, that particular situation could be very complex for you and you do not have like the expertise or experience of how the operation will be going up. So, ultimately what will happen, because of uncertainty factors, the chances of error will increase, or the employee can take too much of time to perform the various activities. So, in order to reduce this particular complexity, we have the different paths or the different networks, okay, through which the activities or the operation will be performed. The company will look into the best path that will be like taking lower time, and at the same time it will be having more cost effectiveness. Okay. So, with this particular concept, the network analysis or the path analysis has been developed. It reveals gaps in the flow plan and sequence of the activity. If you do not have prior experiences, ultimately what will happen? You do not have the like able to plan the sequence of the activity. So, it is better that you prepare the network or the path diagram and do the simulation activity, so that you can have the idea about what activity is taking or which operation is taking what time, and overall the cost factor is also included. Third one is the network analysis uses the probability and the linear programming. Okay, so it is based on the concept about the probability. Okay, you are not very much sure that this particular like from A to B, when you will be preparing you will be sending the raw material, okay, raw material to the production house. So, this is one of the like path or the network that you are connecting. So, which network will be more shorter? Okay, it could be that you are going from direct and from this one, it could be from this one. So, which network will be having the shorter period of time and at the lower cost? So, it is based on the probability theorem. So, two important network analysis techniques are we will be discussing. We are discussing about the PERT and the CPM, project evaluation review technique or the program evaluation review technique, and critical path method. What is these two projects or these two methods? Very first one is the PERT. PERT was developed by Special Project Office of the US Navy. Okay. So, this particular method was developed under the military setup. Okay. Like many times you will see that these methods are not only used in the business management functions, but other situations as well. Okay, it could be in the hospital sector, it could be in the insurance sector, it could be in the NGOs, the business management, military. These practices are very much universal in nature. PERT is a project management that is applicable when time required to finish the project is not certain. Okay, so one important aspect is PERT will be useful when you do not have like the time factor and you do not have the like deadline for completing a particular time particular project. Okay, you are exploring the different path through which the activity can be easily done. PERT is event oriented technique, so network is created on the basis of events. It is not based on the operation, but it is based on the events, alright. On the other hand, CPM is a resource utilization algorithm developed by James Scali and Morgan Walker in 1950, alright. So, it is based on some algorithms. CPM is used to determine the critical as well as non-critical tasks that will be helpful in reducing the preventing bottleneck. So, any kind of discrepancies or any kind of problem challenges faced by a particular activity, we can use this particular algorithm which is called as the CPM to control this particular bottleneck. Okay. CPM is an activity technique oriented technique, so network constructed based on the activity. Okay. So, both the CPM and the PERT are the techniques of the controlling, so that the manager will be getting the picture of the activity or your overall events, how they are performed by the different subordinates. With this, let us quickly discuss the point of differences between these two methods. Both the methods uses the network analysis. Both the methods have the similar kind of the concept, but still there are certain point of the differences. Very first one, PERT technique is applicable when time required to finish the project is not certain. If any particular project which has shorter period of time, okay, this method will not be highly effective. Okay. CPM is a statistical algorithm which has certain start and end time for a project. So, we have seen that CPM is more applicable in the situation where the project deadline is already mentioned, and it uses the algorithm. Probabilistic approach and deterministic approach. PERT uses the probabilistic approach, and the CPM uses the deterministic approach. Okay, so it is based on the probability theorem, and CPM is like determining which algorithm will be more applicable. Third one is 3-time estimate is being used under the PERT, that is most optimistic, most pessimistic and most likely. So, 3 situation will be there, whereas only one estimate is used under the CPM. Next is no prior experience is required under the PERT, whereas prior experience is mandatory under the CPM. Mainly focuses on the time, as meeting time is the target. Okay. However, time and cost, both factors are very much important under the critical path method. So, both the critical path method and the PERT is like a statistical technique, and it is mainly used under the operation research. So, I am just giving you the introductory part or the highlight of this network analysis, and with this we will be moving towards the next controlling technique, that is your MIS. Now, management information system is very much influential in terms of like capturing the data for the purpose of decision making. Okay. Let us try to understand the definition. MIS is the process of collecting, organizing, processing, storing and communicating the information to the different levels of the management, so that the manager can make timely decisions. Now, the point is, like with the vast amount of data that the companies are generating, okay, suppose you are purchasing anything from the Amazon or the Flipkart, you as a single consumer will be generating too much of data. Okay. It could be that you are purchasing for example shoe, you are purchasing a shoe, you will be evaluating so many brands, okay, and based on that you have like you will be evaluating Nike, Reebok, alright, it could be Puma, any other brand, and at the same time you are selecting Reebok as one of the brand. So your behavior will also be measured under the management information system, because management information system or the MIS will be collecting your behavioral pattern, okay, organizing it, process it, store it and sending it for the decision making, alright. Again your behavioral data will be captured, you will be making the payment through UPI for example. Now the bank will be getting the data, or the company will be sending or some kind of information or the data towards the bank that these transactions need to be approved. In a fraction of second, nanosecond, your transaction will be approved if you provide the right credential, alright. Again your behavioral data, your financial data, those data, all these data you will be like getting the SMSs, email, alright. You will be getting the feedback about whether you like the Reebok shoes or not. If you are providing the negative feedback, the company, the Reebok company will be given some kind of data. So with this single transaction you will see that like huge amount of data that you are generating. So imagine how many consumers are purchasing the product online or offline, be it any product. So it is very important or big source of the data for the company from the consumers itself. It is more digital, that is why the chances of storing the data is also highly transparent or highly credible, or at the same time the cost of recording the data, keeping the data is also very lower. Okay. So the company will be using this data for the purpose of decision making. If you are like exploring Reebok, Nike, Puma, these brands, the company may be suggesting you some other product of the Reebok because you are liking the Reebok as a brand. Okay, so ultimately they are reading you, they are understanding your behavior, alright. So what are the different functions or the different advantages of the MIS? Very first one is real time actionable data. Like we have taken the example, within the second each of the data will be generated and each department will be getting the data. Like the sales team will be given your data that you can convince the consumer, because the consumer has liked the Reebok brand. So it is better you show some more advertisement in the Flipkart or the Amazon app related to the shoes or any other product of the Reebok brand, alright. It could be through the email you need to submit the feedback regarding the overall experiences, whether you like the platform or not, whether it was easy for you to make the payment, whether the product like in terms of product features was shown properly, the variety of the product, different kind of data can be captured, and at the same time real time data is captured, so a quick decision can be taken off. Second is preparing the reports at the same time. Like the companies are like having the real time data. Suppose one of the employees from the IT department, they are leaving the job. Now the IT department, they will be updating it into the MIS. So immediately you will see a message will be like a pop-up message will be displayed under the MIS. MIS is what? MIS is a software which the company uses. Okay. And in that particular software a central uh, data collection tool is available, where each of the department, each of the employee will be providing the data, not only the internal but as well as the external. Okay. External data will be captured, external factor will not be, or external parties will not be like sharing the data, but their data will be captured by the each department. Alright. So, we were discussing, suppose any employee is leaving the job, the ERP will be reporting it to the HR manager. Now, HR manager will be starting the recruitment process immediately. So, the time lag to get the information or travel of the information from one source to another is very low. Compare the performances at the same time, everything is very much like tangible, because everyone can see your performances. You can check through the ERP regarding the sales growth over a period of time. You will be able to know how much inventory are available in our warehouses. So, based on that you can place the order to the suppliers. Alright. All the data will be available and that will be helpful in comparing the results. Fourth one is the improvement of the communication. It is more easier, more compatible for all the managers to like communicate with them. They don't need to visit the like office or to the desk of the manager, but all these things can be done through the single software, that is the MIS. Alright. So, with this we have like comprehensively understood about the various management control techniques. The traditional control techniques we have discussed, and the modern management control techniques we have discussed. And in the summary, I will conclude that controlling is one of the very important functions of the management that enhance the efficiency. Okay, that is why we are like emphasizing more time on this controlling technique. With this we have completed the part 11, and in the next session we will be discussing the part 12 regarding the global management practices. I am leaving you with some of the suggested books that you can go through it to get more understanding about it. That is all. Thank you so much.